Hi there, welcome to kneppyinvests. Time to do part two ASX stocks that have been recently placed on my to buy watch list. Part one was released on May the 25th, and I had expected to release part two on May the 26th the following day. However, I unexpectedly had to do a 12-hour day shift for work. Because that was unexpected, I was unable to do that video, and it was delayed until May the 27th. There is, however, a silver lining behind delaying the video by one day, and that is we can look at the market reaction to Gentrack's half yearly. Gentrack was one of the companies I featured in part one, and I mentioned they were releasing the half yearly on May the 27th, and the market was anticipating the half yearly to be good because we did see the share price run up leading up to that date. So before we talk about the four companies I'll be featuring in this video, let's just have a look at the market reaction to Gentrack's half-yearly report. I am recording this video about 1 hour after trading has begun, and the first hour of trading for Gentrack has been quite positive, up 15% on the release of the half-yearly. I've yet to read the half-yearly, and I don't really need to read the half-yearly to know how the market has reacted. We can just see by looking at the share price action. In saying that, however, in the past I have noticed that sometimes we do see a bit of euphoria coming into the market in the first hour or so when a company releases these sort of reports. And that euphoria dies, the professionals come in and start selling. They see the share price has risen during the day, and we might see the share price fall. In fact, it could fall all the way to the close of the previous day. Usually if that happens, that's actually a negative sign that maybe the report's not quite as good as we did see during the first hour of trading. So in these sort of situations, I like to wait until we see what happens with the trading of the company through the rest of the day, even in the next few days as well. So at this point in time, quite positive reaction to Gentrack's half yearly. And I also mentioned in the first video, or part one, that the market was anticipating that half yearly might be good because we did see the share price run up on some good volume. And it does look at this point in time that the market was right. The four companies I'll be featuring in this video include Treasury Wine Estates, Gascoyne, Midway, and Simic. For full disclosure purposes, I have bought back in to Treasury Wine Estates, and maybe it'll be third time lucky, and I'm seriously thinking about buying into Gascoyne as well. Midway and Simic, I've just put them onto my watch list just to watch them. I have no intentions of buying into these companies in the short term. I just want to see how the share price goes over the next few months. So let's look at the first company, which is Treasury Wine Estates. First of all, I just want to show you their 5-year weekly chart, and this chart is eerily similar to Gentrack. In fact, the next slide, I'll just compare Treasury Wine and Gentrack's 5-year charts. So Treasury Wine was another market darling between 2016 and the middle of 2018. So really well-defined uptrend right there. Share price went from $10 to a high of $20 in a few years. So a good time to be holding this company. A lot of tailwinds behind Treasury Wine. A lot of the buy and hold thesis behind this company is the fact that there's a lot of people who believe that the burgeoning middle class in China will become greater wine drinkers in the future, and Treasury Wine will become a beneficiary of that. However, in the past few years, particularly the past year or so, there has been some issues in regards to that. So if you haven't had your head in the sand, you'll know what I'm talking about. They also had some issues in the United States before these China issues. Now, just looking at the chart, particularly in the last few weeks, we do see a potential shift in the momentum and sentiment behind this company. And that's one of the reasons why I've become interested in Treasury Wine, particularly the release of some guidance and some operational updates in the company. We'll talk about that in future slides. A lot more positive, and it does look like the company is turning things around in regards to the operations, and the share price looks like it's turning around as well. So we've got the two most important things. The financial state of the company is improving, and the sentiment and momentum of the share price is also improving. And when you get those two coinciding, that could be a good buy position to take. And here is that comparison between Treasury Wine and Gentrack over the past 5 years. eerily similar, not identical. You'll never get identical charts, but we can see the share price of both companies run up quite well from the start of this period in 2016 to the middle or late period of 2018. In fact, both companies' share price doubled during that period, so good times for shareholders. And then for about a year between 2018 and the end of 2019, share price went sideways or drifted down a bit, and then both companies' share price fell off a cliff towards the latter period of 2019, start of 2020. In fact, share prices fell by quite a bit, almost double or 50% drop for Treasury Wine and a much greater drop for Gentrack. In fact, Gentrack went from $5 to a low of $1. Both companies' share price has leveled off and going sideways as we speak, particularly over the past year. A little bit more volatility in Treasury Wine simply because of the China issues. Every single time it looked like China or Treasury Wine share price was going to rebound. China came out with some issues, dumping issues in regards to wine in their country. They started talking about tariffs, putting 100% tariffs on Australian wine, that sort of thing. But it looks like Treasury Wine is starting to turn things around. Gentrack is starting to turn things around, and we could see the share price run for both these companies for about a year, even longer. So right now is looking like good times to buy in both of these companies. Here is the 1 year daily chart for Treasury Wine, and these are the 3 periods I bought into this company. The first time I bought into Treasury Wine was back in August 2020. When they released their full-year results, the market loved it. You can see the share price rising quite well, went all the way up to $13. And then 3 days later, China accused Treasury Wine and maybe some other Australian winemakers of dumping their wine into China. Absolutely ridiculous accusations, and no doubt it was to hurt Australian winemakers and Australia. That's all they did it, just to hurt us. And of course, the share price took a massive hit, and that was a definite sell signal. Share price went down all the way down to $8 in November. That could have been in regards to the tariffs, I think. That's why the share price went all the way down there. And the market didn't react. They reacted quite negatively on that day, but then rebounded quite healthily. So the reaction for the market was actually a good, healthy reaction. Share price started to go in an uptrend towards later part of January, and when they released their half-year results in February, I took another position. However, the market really became apathetic in regards to Treasury Wine through later period of March into April. The share price was just drifting down very slowly on lack of volume, not what you really want to see. But as soon as they released this financial update on the 13th of May, it was very positive. The market reacted to that positiveness in that report or update, and that's when I hopped on board. I didn't hop on board straight away. I waited about 3 or 4 days until I took another position in Treasury Wine, and hopefully third time lucky. I think this is a much less risk-free position because they have their strategy, I think, is starting to work. They're becoming less reliant on China and trying to diversify those markets they're putting their brands into. And I think it is looking like it is working. I love this strategy because I don't believe Australian companies should be too reliant on China, because China, in my opinion, is very, what's a good word, unpredictable in what they do. The next company I want to talk about is Midway. This is a wood fibre processor and exporter. There are 2 reasons why I have become interested in this company recently. The first reason is because of the share price and the valuation of the company. So the share price has been going sideways for just over a year, around that dollar mark. And when you compare it to what the share price was 2 years ago, around $4, that was the high in early part of 2019. And we have seen the share price hit by 75%. And then compare that to the valuation. Market cap 89 million, yet they have revenue of 286 million and operational cash flow of 23 million in the trailing 12 months. So there could be some good value right here. And as we see the share price going sideways, all I'll be waiting out for is a bit of a breakout in the share price to the upside. The second reason I'm got to have a little bit of interest in this company is because of what's happening with timber prices throughout the world. They're skyrocketing. And I've been thinking, is this company a beneficiary of the skyrocketing price of timber because they are a wood fiber processor and exporter? The share price action maybe is suggesting they're not a beneficiary. You would have expected the share price to go into or turn into an uptrend if they were. So my eyes will be featured on some of the results, announcements that this company releases. If we do see one positive announcement from this company in regards to any sort of financial benefits the company is receiving, that would be the time to buy into this company. So although when you look at the weekly chart, so the previous chart was a 5-year weekly chart, the share price does look like it's just going sideways. When you hone in on the 6-month daily chart, you do see a little bit of volatility here. Share price has been trading between about 80 cents and $1.10. It does look like the share price could be developing into a nice little uptrend, but again, I like to see the share price get above $1.10 on good volume, preferably on a positive announcement. It looks like 80 cents is a really good support level. We saw that double bottom back in February and March. That would have been a good time to buy as it swung upwards. We haven't seen a lot of volume coming into this company at all. And this is the reasons why I put Midway onto my watch list, because there could be some tailwinds behind this company. Good value, but I'm just not seeing right now anything to get excited about Midway when I look at the 6-month daily chart. If I get any signs, any sort of good announcement from the company, that's when you hop aboard the Midway Express. The next company I want to look at is Simic. This company was called Leighton 5 years ago or so. Not sure why they changed the name. Anyway, I'm always wary of these sort of companies. We're not talking about these sort of companies. We're talking about those companies who put in tenders for contracts, and there's a whole, process all these companies go through, and eventually one company wins the contract. You just don't know what the margins are when they win the contracts. Did they underbid the other participants in the tender process? And are they actually going to lose money because they underbid the rest of the participants in the process? And you can see that where you look at the market cap of Cimic, 6.6 billion, revenue 7.8 billion, but operational cash flow negative 265 million. So they must have really low margins, and you always see Cimic release, seems like every single week, about them winning a new contract. And every single time I see them winning a new contract, I just think, is it because they just underbid all the other companies? Are they actually going to make money out of these contracts? You just don't know. So it's not about winning contracts. It's about the margins they have when they win those contracts. So here is looks like the monthly chart going back 15 years. Definitely not a buy and hold sort of company. We can see the share price reach a high of $60 way back just before the GFC, and then it took a nosedive. The only time you might think about buying into this company is if the share price gets to about $15. $15 seems like a really powerful support level. It's reached it about 3 times. It reached it in 2009. It reached it again, actually 3 times in 2012, 2013, and 2014, and then bounced off it. Went into a nice uptrend. I remember actually thinking about buying Simic back in 2014 because of this uptrend. So it went from $20 all the way to a high of $50. Then we saw a triple top. That's a really good sell signal back in 2018, 2019. And then share price fell off a cliff and has been falling ever since then, and is currently around or just above $20. It reached $15 again in the COVID-19 financial panic, but bounced really well in that month of March. So at this point in time, no reason to buy in this company, and the only reason I put this on to buy watch list was because of the next chart. This is the 6-month daily chart for Simic, and we have seen a bit of a shift in the short-term sentiment around this company. It coincided with the release of their first quarter financial year 21 results. Share price did go up just leading up into those release of those results, then went sideways for about 7 days, which was actually quite healthy. And then we've seen the share price explode in the last 2 weeks, going from about $19 to $21.46. Feels sort of weird saying it exploded, but it does look like the share price has moved into a nice looking uptrend. This is definitely not the buy and hold sort of company. So if I did take a position at these prices, I'd keep a very close eye on the share price movement. And if I see any signs of distress, I'd be an automatic sell. At this point in time, I have no inclinations of buying into Simic. I just want to wait and see what happens over the next few trading weeks or even months. My main concern, the fact is operational cash flow negative, and they're still negative when they release their first quarter results. They'll talk about how it's positive, that they're not as negative as they were in the previous corresponding period. But I don't know how they exist if they're winning all these contracts and can't still make money. The final company I want to talk about is, without doubt, the most fascinating company I've talked about in this series, and that is Gascoyne Resources Limited. Now, when I decided to do a little bit of research on this company, and the main reason I put this onto my watch list was because the company's share price is a nice developing uptrend. When the company released the most recently quarterly cash flow report, they are generating a heap of cash. And that's the two reasons I became interested. Then I looked at the market cap of the company and then looked at the operational cash flow over the trailing 12 months. And the market cap is only double the operating cash flow. That is suggesting there's really good value. Then I looked at the share price action over the past 5 years. And I saw this massive gap or period of time when the share price was not traded. So the shares of Gascoyne were in a suspended state for over a year between the middle of 2019 and towards the end of 2020. So why was that? And then I go back even further. The share price of Gascoyne was as high as $12 back in 2016 and fell all the way to 50 cents before June 2019. And then what happened in June 2019? Well, the company went into administration. So without doubt, at that point in time, there's a lot of shareholders who thought this is the end of the company. Whenever you see a company going into administration, a lot of people just assume the company's going bankrupt and that's the end. Not always the case. And this is one example where the company can come out on the other end a much healthier company. And that's exactly what has happened with Gascoyne, all thanks to the administrators. The company was completely saved by the administrators' actions, in particular what they did with the mine. I'm not sure if the administrators were mining savvy or they had some advice from mining savvy advisors, but they did some amazing things. And in fact, I'm going to talk about this company in a video which I'll dedicate solely to Gascoyne because of what happened in the last 2 years or so, and how this company was completely saved by the administrator actions. And we'll look at the next slide, which shows you the share price action since they came out of administration. And that's the main reason I became interested in this company. And there's another reason also, and that's because of the cash flow, the amazing amount of cash flow this company is generating over the past 6 months or so. This is the 6-month daily chart for Gascoyne, and a fine looking chart indeed. You can see the share price in a nice, well-defined uptrend. This is something I really want to see because the share price is moving up slowly. One of the reasons I think the share price is moving up slowly, even though there's really good value here, even though the company is a cash-generating machine at the current point in time at really low markup, is because the history or the negative history of the company over the past 2 years, particularly when the company went into administration. So there's going to be a lot of participants in the market who are a little bit wary about this company because of that thing. But because they're wary, there is that opportunity of buying into a company where there's good value. So more than likely, I will take a position in this company. I'm being a little bit patient now. I think a share price at 57 cents at the close of trading on the 25th would have been a great time to take a position because the share price actually has moved into the 60s again. I think it's about 62 or 63 cents as I speak. So a fascinating company. I'll do another video, a video dedicated to this company in the next week or so, maybe 2 weeks, because an absolutely fascinating case of how administrators completely saved a company. That is all I've got for this part 2 to ASX stocks that have been put onto my to buy watch list. Hope you've enjoyed it. If you do have any questions about any companies I've featured in this video or any other companies on the ASX or international companies on overseas exchanges, leave a question or a comment and I'll answer those as soon as possible or whenever I have the time to do that. Hope you've enjoyed this video. And the last thing I should say is I'm not a financial advisor, so if you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's all. Have a good day. Bye.